Hey guys, thank you for being on the State of DeFi panel. So we're a part of right now the hackathon going on at Harmony. You can check it out on hack.harmony.one. And really, I think we're in a very exciting phase in the crypto space. And then if we zoom in, there's a lot happening on DeFi. And I think all of our panelists right here, we're going to, in a moment, get to know them real quick. But they've been deeply involved in all the activity on both sides. We have builders like Sunil, and then we have Saurav and Kyle who've been, wearing the investor hat and actually analyzing how the space is evolving so super rapidly. So we'll jump in and get to know your thoughts on how you guys think about DeFi today and what do you think, DeFi tomorrow looks like. And most importantly, I think one thing that we'd like to underscore is the theme of the hackathon is how do you bridge traditional finance with DeFi? And I think that's a big question that all of us have been trying to answer within the crypto space. So we'll try and touch on that a little bit. But this is being recorded and hopefully we'll get it done in one take. But let's get started. A quick intro. I'm Sahil. I'm one of the co-founders at Harmony, and I lead all things product at the team, and super excited to kind of experience the last 3 to 4 years of crypto. But it's not about me. Let's hear a little bit more about all our panelists here. So guys, welcome once again, and thanks for taking out time from across the different time zones and world. But let's get started. Let's just go around and introduce yourselves, where you work, and maybe share one thing you're most excited about in DeFi today. So we can, in no particular order, whoever's ready, we can get started.
Yeah, I can get started. So hi everyone, my name's Kyle. I run an accelerator called Valhalla Capital with my partner James, and we're both out of Puerto Rico. So if you're ever in town, hit me up. I've been in this space for a long time. Really got interested in blockchain when I was still working at IBM, and then jumped more into the startup world, and was a really active yield farmer in 2020. I actually know Sunil just from another group we're a part of, just a bunch of DeFi degens. And just one thing that really excites me about DeFi, I got to say, as a gamer during my childhood, like I know there's probably lots of other panels discussing this, but man, Axie Infinity, Play to Earn, just all of these really interesting gamification ideas and tying together with crypto, right? This is amazing, right? And I can't wait to see where it goes.
Yeah, I'll go next. Hey folks, Saurabh Sharma, I'm the general partner at Jump Capital. Jump Capital, we are a early stage venture capital fund, investing in software for the last couple of years, but also very early kind of entered in the crypto investing game of personal passion of me and a couple of my colleagues here. And I think we've kind of, I would say, given a lot of insights that we derive from our partner firm, Jump Trading, which is one of the largest kind of active players and dominant players in the space. We've been doing a lot of work across the range of spectrum. I think some of the earlier news have been coming around things that we've been doing on the building side. So there's a lot of building and R&D that we're doing in the ecosystem for solving a lot of complex challenges. Of course, we've been pretty active investors on the CeFi and DeFi side related to crypto exchanges and wallet securities and so forth. And then, of course, as a Jump Trading has a pretty dominant sort of liquidity and trading and market making operation around it. So we're pretty excited about the space, and I think we feel like we're just getting started, and there's a lot to go from here. There's a lot I'm excited on DeFi. I mean, I would say pick one unique thing in addition to gaming, and I will agree with Kyle. That's I've been a gamer in my past life, and I had time. This is pretty exciting to see. I think the emergence of where the DAOs are going is something that's pretty interesting for me. Obviously, it's funny that I'm talking it as if it's been in the making for years, but it really kicked off with Compound kind of really coming out last year, and from there on, I think this construct is very interesting, and I'm actually pretty excited about what form it takes.
Awesome. Hi, I'm Sunil, the founder and CEO of Saddle, a automated market maker for peg value crypto assets. Prior to this, I was working at Uber for about 5 years, and I first got into crypto in around 2017. I'd have to say what I'm most excited about is for the mainnet launches of some of the layer 2 solutions, so namely Arbitrum and Optimism. And I kind of hope they kick off a second DeFi summer once they are live.
Fantastic. Thanks so much, Sunil. So I think it's fair to start. Thanks, guys, for sharing. We've got a great range of things you're excited about, right? From, play to earn and gaming and how it intersects with DeFi to DAOs, as Saurabh mentioned. And of course, the multi-chain world is getting real, right? So I think you guys already probably read or hacked into my notes right there. But I'm glad that we have a lot of interest there. So maybe let's take a step back and start with how we've got here, right? 2020 was a DeFi summer, right? And I think Kyle, you mentioned about farming. Saurabh Jump's been already in the centralized CeFi kind of game with some of the investments with BitGo, Bitso, and then also on the trading side. But tell us how you've seen the 2020 to 2021 evolution of DeFi and things you feel have matured now. I still remember back in 2019 and 2020, early 2020, we used to think none of the DEXs are going to give Coinbase and the centralized exchanges a run for their money, right? We used to compare the trading volume and they were about 1% to 3%. And now we're in a different world. Take us through what you've seen in the last 1 year precisely, and what do you think has matured, within the DeFi space? Anyone could start, but Kyle, if you want to get started, you talked about it a little bit.
Yeah, I'd love to get started. So I think back in 2017 and 2018, there was a lot happening all at once, right? Especially when people discovered the idea of the initial coin offering as a fundraising tool. And I think it sparked a lot of really interesting concepts, right? At least on paper, the idea of decentralized exchanges. And I think at the time because the space was so flush with capital, a lot of developers and ambitious founders were thinking, build it and they will come, right? So they built all these great decentralized exchanges and other beginnings of DeFi primitives. But then people discovered, oh no, there's no reason for people to provide liquidity to these products, right? Because the fee that you would make, right, annually was just so small. The APY was just, at such a low percentage that the opportunity cost of parking that capital there is horrendous, right? So, these years passed, obviously we went through a pretty extended bear market. And I would say in 2020, Synthetics and Compound probably contribute the most, right, to this huge Cambrian explosion of DeFi. Synthetics really introducing the idea of locked and staking rewards, and Compound really popularizing the idea of a governance token, right? I can still remember the excitement when that first launched, and people were kind of speculating, will this token go to zero? Will it keep going up? What's the value of the token? And hand it off to one of the other panelists now. But I think that advent of the governance token and staking, that was kind of the magic key that unlocked liquidity, right? And when all this liquidity flew into the space, suddenly a lot of these other DeFi dreams or products, right, became possible when you had this foundation or bedrock to build upon.
Yeah, I agree with everything Kyle said. I think the one other thing that I think is very different is, as with every ecosystem, as it matures, you just had stronger and stronger teams building in this ecosystem. I think, a lot of smart folks were building it inside, but it's a small set of folks, and some were more, I would say, euphoric about it, but maybe not have that much of deeper technical chops to kind of build sort of deeper, complicated products to think through the full spectrum of things. So I think generally the teams evolved. A lot of folks who were skeptical of crypto maybe read more about it, got excited about it, the general education, and then a general possibility. I think education is one thing because obviously the narrative is around Bitcoin, right? I think Ethereum narrative was there, but probably not to the extent of possibilities. And you put a lot of smart people who can say what else could be doable if you go beyond the first constraints of Ethereum and I think the conversation of layer 2s had already started. So the possibility of solving the bottlenecks of Ethereum had already been in the play. And that gave a lot of people the comfort to say, I can actually build some more scalable solutions on top of it. So they all came in, new ideas. I also think the liquidity part is a pretty important one, as Carl mentioned. I think liquidity on the enabling democratized liquidity on these pools, but then also the conversation on this cross-chain liquidity, where all these can, the apps not working in isolation, but actually working with each other. The whole composability aspect is actually so core to the DeFi thing that single app doesn't mean much. There's a whole cycle around trading, borrowing, lending, right? And the AMM. So all four pieces kind of fit together. And I think people kind of saw that. And then as soon as they kind of saw the circle of that liquidity moving, it became quite beautiful.
Yeah, totally agree with everything Saurabh said. To add to that, I think one of the kind of the biggest ways that the industry has matured since, the 2017, 2018 kind of ICO boom is like back then, I think the utility that a lot of these products and protocols offered wasn't really like in line with people's expectations. Whereas like now you have completely auditable history, something like $70 billion in DeFi, and like you can audit every single cent of like money that is flowing through these systems, which is like a radically better system than what you can like get in TradFi, for example.
Absolutely. So is it safe to say, guys, that some of the primitives in DeFi that we see today, from algorithmic stable coins, right, to AMMs and different DEX models, to lending and borrowing, all of them have kind of matured together and become composable? And is it safe to say that there's product market fit? Any new developer can actually start building on or just fork any of these, primitives, and there's a market for it. Is it safe to say, or do you still think that there are some rough edges still within DeFi with some of these popular primitives as well?
Yeah, I think building the Lego blocks piece has been proven, right? So yes, there is a lot of underlying layer. And, I always, when someone who's absolutely new to crypto, and like, what is the big deal? Why is it blowing up? And I'm like, think of this. This is open source on steroids with actual economics involved, right? If you tell an average developer to go work in some deep Unix problem, only the passionate geek will get excited and build an open source code. But when you tell folks that, hey, there's an open source platform, you can actually build an app and go live, and it will be available to the rest of the world without having to go figuring out some KYC process, some banking license, some channel, and then the whole world of exposure, everyone will build, right? And you can start making money the next day. So I think the underlying building Lego blocks is actually is there. I think composability piece, the liquidity optimization piece, I think that they're kind of still, I think, early in my view. I think some of the projects have done pretty well, but I think they have been also grappling with the gas fee piece, and the net sustainable model, I think, will get solved over time. A lot of the early part is driven by speculation, leading to lending, borrowing, high APIs. Obviously that's not a 10-year game. That's obviously something in that up. So for it to be a 10-year game, I think the composability aspect that I mentioned, and then consistent, sustainable liquidity aspects, I think are still kind of in the building phases, at least in my view.
Absolutely. And we'll touch a little bit about some of these points that you mentioned. But maybe one last piece, and then we kind of head over to what do you think are still parts of DeFi that are yet to take off, or some of the constraints that we're grappling with. But before that, I want to touch on, anyone has opinion on stable coins. And I think there's so much innovation that's happened from, I think DAI is a fantastic model, but from there to, things like Ampleforth, to things like Fei, and now even we see Frax, right? Fractional algorithmic stablecoin. So is there something that you've seen? This is the innovation we need, or do you think that we already have enough, and now we just need to double down on a couple of these models? And you please feel free to pick your favorites if you may.
Yeah, so for me, I won't necessarily pick favorites, but what I'll say is that for at least more of the centralized stable coins, or the ones that are backed more one-to-one, right? As USDC is definitely the market leader in that regard. I think, and maybe this may be slightly controversial, but in my view, I think there's always a market for that, right? I don't think that's something that would or really should go away, right? For many people, USDC having a publicly listed, United States company, with auditable reserves backing that coin, right? That has utility, right? I think that really can't be argued. But at the same time, there is, as you said, Sahil, like really, really, a form of just elegance with something like DAI, right? Which is just completely, from the fine folks at Maker, right? Where you've finally been able to create something that's probably the closest to a more like decentralized stable coin, right? Of course, I know with the reserves right now, right? Some of the portions of the reserves are in fact those, dollar-backed stable coins, but nonetheless, right? It's not something that can be blacklisted or manipulated, right, in the way that a more centralized one could. And just a quick note about the experimentation in stable coins. Like these would, I guess, more be popularized as the algorithmic stable coins, right? Naturally, there were a lot of really fascinating experiments, right, over the summer, right? Most of them, I think, at the time, right, were very, very innovative. And I would just say, right, obviously being an investor, but also having worked on the other side of the table as part of some crypto startups in the past, I would just argue that there's never enough innovation, right? I think innovation should always keep going on. And whether or not these experiments end up not achieving that success or not meeting like whatever goals the founder was hoping for, these are all building blocks, right? And other projects look to them, and it's incremental, and we move step by step into the future, right? So I would say Faye and these sort of things, like you kind of look at them, and it's unfortunate because some of these designs are really hard to get right? I really feel for a lot of these founders, because not only do they have to deal with a lot of regulatory uncertainty, but with the way smart contracts work, right? You got one shot, it's one and done, right? You can't really just push out an update, right? Like you could with any other piece of software. And you're doing something that economically impacts, right, your users, right, in a very, very steep way in many cases. So that's just my 2 cents, I would say, on the stablecoin environment right now.
I mean, I think stablecoin is one of the probably a long-standing killer app of the crypto ecosystem. There's a lot of stuff we built, but it's kind of like the central color rail, which I think is also obviously the perfect bridge for us to get more and more connected from traditional finance to this. And I think, to me, I would agree, Kyle, there is no like one and done. I think all of these are bridging pieces. USDC seems the most easiest piece to grapple. If you can explain USDC to an average person, to average banker, to average regulator, I mean, they will get it, right? As soon as they get it, it's kind of like you got them crypto on-ramped, right? Which is, what most exchanges do. So you got crypto on-ramped, now they're in the crypto world, and now you can do crypto-to-crypto conversations with them and start moving them along the line. That's how I think about it, because that's how the whole world gets on-ramped, pretty much,
the
right?
Gateway drug, USDC.
That's right. So, and then once you get there, I think then is the question of you have enough people to be on-ramped to say, we just live in this world, and I call, not to confuse metaverses, but this is the metaverse of crypto, and now we want to live it here. Then I'm just I'm mixing and merging the terminology here. But now you're metaverse of crypto, then you can play around with, say, if you're never going to leave, then it's okay if you do thinking algorithmic stable coins, right? Because the reason you're so worried about algorithmic coins is because you keep thinking about fiat all the time, right? And then the peg, it disassociates from it, falls out. So I feel we're on the bridging pieces, and hence the innovation will continue and should continue. I mean, UST is a good example. I think it's already one of the successful ones in addition to DAI, and that ecosystem has proved a lot of mainstream use cases kind of built on top of that. And I think that DAI, some of the innovations, I think, my point, we're not done, Sahil. I think since it's such a long-standing killer application, it will continue to be getting optimized. And we could see verticalized or geographical kind of splits into that, depending on things. But end of the day, I think we're pretty far away from end game in this.
Great. So I think definitely Kyle and Saurabh are encouraging more and more developers that are watching this panel to keep on innovating. There's no bound yet on so many of these primitives. So hopefully, I think we'll see a fusion of these coming along, chugging along, and moving the space forward. Sunil, I want to come to you and maybe kickstart the conversation around what are things probably constraints in the next 6 to 12 months or in DeFi that are yet to take off. And I want to touch base, you're building, an AMM for pegged assets, solving a real problem. But then, these problems get compounded as we see a multi-chain world. We see these bridges, right? We see, new vectors being associated. And now with bridges, you see fragmentation of, assets potentially and users. So who should have this burden? How do we solve this? Is it on, all these bridge technologies to go and figure that out, abstract away details from the developers? Or developers have to, do the hard work and deploy on multiple chains and then abstract it away from users. So tell us more, and feel free to add your color on some of these constraints as well.
Totally. Yeah. So this actually might be kind of a controversial take, but I am generally of the opinion that like mass adoption is going to come through people interacting with, crypto rails through like familiar apps and like, the things that they're used to. Some people are like, oh yeah, my entire family and grandma's going to learn how to use a ledger and they're going to become Web3 ninjas. I personally just don't think that is like super realistic. And in the next like 6 to 12 months, as some of these layer 2 solutions start to go live, what I think we're going to see is a lot of the complexity that you need to deal with right now in terms of just like if you want to turn $1 into USDC, for instance, like signing up for a Coinbase account, setting up a hardware wallet, et cetera, going through that entire process is really onerous and tedious, right? I think once these L2s come out and like folks can now deposit money on a fiat exchange and withdraw directly to these L2s, you're going to start seeing a much lower barrier to entry. I think this is what a lot of protocols and founders are going to be kind of thinking about. How do you actually build a system that starts to, work across more than just Ethereum? Like, how does something look if it's on Ethereum, Binance Smart Chain, Polygon, Optimism, ... And just by virtue of these systems not being live yet, and they're so new, we really don't know what it's going to look like. And I'm very excited to see what happens.
Great. Absolutely. And I think we're at Harmony definitely feeling some of these pains as well. But Kyle, Saurabh, any thoughts on this particular piece on cross-chain, DeFi? What are the missing pieces? Besides, of course, these exchanges and these user-facing apps abstracting away, maybe even if it's aggregators, you don't get to know, how to change networks. They anything else that's probably needed to take it?
Yeah, of course. So Sahil, I would say that especially in this space, sometimes it's easy to kind of get lost in this bubble we're in, right? Like the people on this call and perchance many of the people watching this particular panel, you're probably already part of the 0.00, I don't even know how many zeros, right? Percentage of the world, right? Who not only are interested in this niche that is crypto, but this even smaller niche that is DeFi, right? So it's just such early days where a lot of what's being built here, the complexity continues to increase over time, especially when you introduce cross-chain swaps and transactions, right? Unfortunately, there was some rather large exploits even recently, right? As of filming, so I would say, like, to echo a lot of what Sunil has said, like I think he's completely right. Like for the average user, right, who wants to interact with crypto or would benefit from crypto, there's just such a thing as rational ignorance, right? You just cannot commit so many hours of your day to figure out and get deep into the weeds, right? I know a very common and maybe a cliched kind of comparison now is the internet, right? With TCP/IP and everything that goes on under the hood, and how the average user, right, for your grandmas who can use the internet, who can navigate the internet, right? But certainly for parents who have figured out, Googling and these kind of things, right? There's never any need, I think, to interact with any level of complexity, right? When you use these products, and I think DeFi will eventually get there. It's just it's so early, and we're not even, and I think we sometimes even forget to count our blessings with how far we've come in even 2 to 3 short years, right? I think I'll just add this final thought that for myself, 2017, 2018 was very exciting, but in a different way. But I think recently, over these past couple year and a half, 2 years, it's been the most fun I've ever had, because you see, like, it's not just like a concept anymore, right? You see this glimmer of hope. There's services out there where quite frankly speaking, they work, right? For copy trading, insurance, right? AMMs, lending, all this kind of stuff. You can kind of see how these puzzle pieces can actually fit together. And now, maybe to kind of just add a capstone onto what Sunil said, I think it's just a matter of time.
Yeah, I mean, I always say this. I put the two buckets where I think there's going to be more and more work and it needed. I call it internal adoption and external adoption. Internal adoption is people already in crypto, how their penetration is going to increase, and call it gross aggregate TVL is going to increase. And that is all driven by, I think, this conversation on multi-chain interoperability. They're all kind of talking composability around across chains, right? Because not going to the debate of what chain is better, what L2 is better, but each of them are definitely super optimized for at least some use case, right? And they have their strengths, and so let the world figure out how that works. But as long as they talk to each other, things work fine, and people are going to use more and more. The external adoption, which is obviously the mass adoption, is all driven by user interface. I think the user interface piece is I think that's like to be, and as the internet, right? I'm a computer science engineer from 2002, and the stuff that I used to write code on is now called back office stuff, right? Like, and the cool stuff is like writing Ruby on Rails stack, the front end application, right? And that's where so much of value accrues. It's funny. I think that's going to happen here as well in many ways, because that's going to build people. And I think there's so much user interface needed. And as long as, your lending protocol doesn't look like a Unix terminal, only then people will come start using it. So I think both these things are gonna start driving the next phase.
Absolutely, thanks, Ed. I think we're going to touch on this just in a few minutes more on how we see this. This statement keeps on being heard every now and then. Is the future will be when the fintech has the front end and DeFi is kind of the back end, right? We'll just, I think, definitely unpeel this one in a bit. But let's go down. I think it's great to definitely count our blessings, like Kyle said. This space moves faster than any other probably industry that we've seen in the past couple of decades, perhaps, right? But still, there's so much to be done. And I want us to just probably think through a little bit on unbundling these current DeFi user metrics, right? So there's crypto native users, and like Saurabh said, there's mainstream users. How many crypto native users are using DeFi versus these mainstream ones using Coinbase and BlockFi, right? What is the kind of demographic of these users? High ticket value users on, termed as Ethereum whales, perhaps. Maybe some of you are among them. These small investors who do not have the money to pay the gas fee, and they want to, borrow $1,000, right? And that's a lot based on where they live. And then we have new versus repeat users. When Sunil launches his AMM, are these the same users who are using Curve and Uniswap, or are we getting new users, right, into DeFi applications? So these are some frameworks we're trying to think about on how do we think about users. And right now there's a high skew towards the same repeat high ticket value users which are using and churning across different protocols. How do we change that? Is that something that a new protocol that can think through?
Yeah, I'll kind of comment on that one. I would say that, to me, I think, in the long run, of course, because I'm very focused, and all of us on the call, I think, are very specifically focused on decentralized finance applications and the money Legos and everything coming together. But I think, to me, I don't really feel as much of a sense of urgency of drawing in new users necessarily specifically into the world of yield farming or, these other using these DeFi products, right? Right now, I think it's sufficient that you have these kind of more, experts or veterans or just longtime power users kind of, doing the churning, because I think a lot of that, I think a lot of it, whether inadvertently or purposefully, right, that's what kind of ends up showing which products will survive and kind of rise to the top, right? And which become like the primitives that last and stay. And I only say that because when I look at the mainstream audience, like the metrics that I see, and even the anecdotal evidence that I see, is just overwhelmingly powerful, right? Maybe to echo an earlier point that Saurabh was referring to, and to strongly affirm that, like, I just see the amount of talent coming into blockchain or wanting to come into blockchain. It's at a whole other level compared to a couple of years ago. Just two aspects I'll comment on. One, even with my alma mater, right? I went to Penn State University, right? So years ago when I went to Penn State, and I don't know if this is too much of a call out, but I spoke to one of the heads of one of the deans of one of the colleges there, right? I just keep it anonymous, but he told me at the time that I think blockchain is a fad, that it'll go away in 3 to 4 months, right? And now when I talk to a lot of students there, I would say probably out of every 10 students that I talk to, almost all of them have heard of crypto, and almost 2/3 of them own crypto, right? So these are Gen Z. So you can kind of see a lot of this more mainstream in terms of the newer generations, they're already here, right? And they're adopting it at even a faster rate, right? So hopefully that kind of answers the question. So I just think that one of these things is that we don't necessarily have to pressure ourselves that much to think of okay, how many new users is Uniswap or SushiSwap or specific AMMs going. I think so many people are already entering the door, right? And eventually they'll make their way here. It's just a curve, right? Just a fire hose of information to make your way through.
Yeah, I think one thing I do wish, which I don't know if is going to probably happen, is that somehow you're able to separate out, or maybe somehow stop the early incarnation of the folks who just made a lot of money in crypto, and now they're super active. Because the problem is, if they really skew how these protocols work, because they're so active. They will quickly spike something up because it's, call it playing with the house money at this point. And that really shadows the actual real utility play on these protocols. And I would rather have all the Gen Z, as Kyle mentioned, who've made some money in crypto or recent entrants, and they will be very earnestly careful about every single dollar optimization on the return, right? As you do with everything else. And they will really sift throughout what's working, what's not, put the 5 pieces together. If you made so much money and your ability to pay so much of gas fee and not care about the spread, it really overshadows how are these, because again, we have many applications at this point fighting for the play. It's hard to sometimes sift throughout. So you don't need a lot, but I do think you need at least enough mass to be able to help optimize finding out the good versus the bad projects.
That's a great point. So I think another topic we could definitely touch on, and I'm pretty sure all of you have some insight and experience dealing with this, is how do we bridge traditional finance with decentralized finance, right? And it could happen on multiple vectors. I can just throw in a few, and please feel free to build more because you have much more knowledge. It would mean, hey, we get traditional finance people involved in DeFi. And I think, for example, Jump has that nice vantage point where you sit between traditional finance and now DeFi and actively operating and participating as well. So that could be one where just it's purely talent. Hey, what if Wall Street folks are partnering with Web3 devs and trying to create these new financial primitives? Another would definitely be regulation, and the third would be how is there an interplay between fintech as we know today, which is attracting all these Gen Zs that Kyle mentioned, but still very, very on the fence on interacting with DeFi as much as we would hope, right? So just throwing in a few vectors here. Feel free to share how you think we can kind of bridge this.
Yeah, I can start again. So with TradFi, I would say in crypto, it sounds like obviously there's like often controversial opinions, right, about how Wall Street and the interplay between Wall Street and crypto. But just in my experience, at least from the people that I've seen, right, coming from the street into crypto, it's a really welcome addition, right? And in many ways, it's a very welcome kind of migration because, again, to kind of go back to 2017, 2018 again, we had a lot of these very and these ideas that seem like low-hanging fruit, like on paper, right? Like I would just think off the top of my head, like carbon credit, exchanges, right? Or these kind of credit, like, credit history kind of plays and these sort of things. But overall, like a lot of them kind of crumbled, not only with the market, but just because none of the founders there were really in touch with any decision makers, right? Or people who knew how to work with a lot of the institutions that would have been necessary to play a role, right? Especially in areas where there's just a lot of regulation, right? And there's a lot of, specific kind of pitfalls, right? That you have to understand just making your way through that industry or working through the industry. So like one very positive example, and I always call out this person, he's a friend of mine, but so my friend Dean, right, who started at Polygon, he's the head of institutional markets, right? He came from Blackstone Group, right? And just very, very bright people there. And just being at Polygon, I'm sure, for you guys, we have friends in common there, but he's been a tremendous asset, right, to the team because he's able to bring together a lot of very interesting kind of Wall Street style thinking, right, about how to package products, right, to kind of support the treasury, right, how to raise funds from, these particular clients of his in the past who are not crypto native, right, but, who he knows well, right, and they trust him. And, interestingly, it's kind of this trust layer, right, that starts to bring a lot of people in. And again, going back to the talent that's coming to the space, another observation I've seen is that with the coming of many more serial entrepreneurs, right? And this might be after their first or second or third exit, right? Those entrepreneurs usually already have great institutional connections, whether they're very renowned fintech venture funds, right? Or in the banking or lending industry or Wall Street, et cetera. So they already come with a bevy of contacts, right? That makes a conversion very, very simple when you start to want to actually bring in institutions, right? And you understand their KYC, AML needs, and you understand how they operate, right? That's a huge advantage, I think, that hasn't been felt as sharply as, this past year.
Yeah, to add to that, one thing we've started to see is a lot of these protocols start to actually launch a more like permission set of their services. And so I think Arjun Balaji from Paradigm was the first person to call this out in one of his essays. And a more recent example would be Aave launching their kind of like Aave Pro product, where basically in order to participate in these liquidity pools, you have to be completely KYC and AML, which is a big point of concern for a lot of these institutions. And actually, this is a question I'd love to get feedback from the rest of the panel, but do you guys kind of think that the terminal state here is that you'll have two separate worlds of DeFi, where one is completely KYC'd and AML'd and the other one is completely anonymous, or would you expect those to kind of merge over time?
That's a great question, Sunil. I've been trying to answer myself, and people actually come with compliance type solutions for DeFi. We've been thinking about it, and I don't know the right answer. I think it's really also a question of who are the folks who are in the DeFi world, how many of them are there for the custody reason, and how many of them are there for non-KYC reason. Because if they're for the custody reason, then a nice compliance solution which works, they should have no problem in integrating, and then we just need to have one big pool. The majority of them are for the custody, and then that's great, because those compliance type, regulatory type solutions will enable institutions to come in under the regulatory purview and then take advantage of the DeFi innovation, and then still keep the self-custody piece going. I think if I don't have a good stat on that. If majority of them are like, hey, I don't want to deal with KYC at all, and this is the whole idea of enabling the world of unbanked and un-KYCable folks and so forth, then I think that's going to be tough. And then it is going to split liquidity. It is going to split that piece, and that would be interesting, because then I would question that institutions really want to come. If there's retail volume, if the retail is not going to be on those permission stuff, then why wouldn't it just come at all? Because they don't want to be just trading with each other. So it's a good catch-22 situation, a little bit yet to be seen. I do think there is a lot of interest from institutions to kind of tap this market. This is obviously they also realize it, the ones who actually already have bought into crypto, that this is obviously a bowl of innovation and innovative products, that it's very hard for them to kind of move on that kind of product structuring on their own wall, right? Just because they're relying on their own developer force, and here there's a developer force of the world. So that's kind of yet to be seen. I think there's a lot of interest, but it's unclear how they interact with it. And then the second piece, I think earlier I was saying that there is some very interesting examples of, there's a lot of interesting CeFi and then also TradeFi data that needs to be integrated. So all the Oracle stuff that's happening, that's actually a very good example of the connectivity of TradeFi to this, right? Jump has been quite actively involved in contributing to Pyth project, which is the phenomenal example of real world TradeFi connectivity to this. I think if you look at the amount of folks who have joined that, that's everyone who's of the who, right? In every single large provider. And there is no better, bigger network and nexus of best quality data on chain at this point. And I think these are the kind of examples of how there is so much value. I mean, people have not yet figured out the credit scoring piece, right? As you think into asset finance side of this, that's such a big piece, right? And it's going to take a long time to build a credit history on chain or purely an on-chain activity, right? Because we just don't have that much longevity. So you still have to rely on to do this credibly on that. And that's another example of real use kind of TradeFi type stuff that can be helpful on the DeFi side.
Yeah, I completely agree with what Saurabh said. I would also just say that the current trend seems to be the assumption, at least in the near term, that there will be two separate worlds, right? So much of the opportunities that I'm seeing that are trying to help bring institutions in, it's really untenable currently without some sort of walled garden or whitelisted pool or some sort of institution-specific KYC. But it's all, I think, based on regulation, and we'll see how the regulation looks like in the next decades, right? But that's a really great question, though.
Absolutely, and I think rest assured, hopefully we get the answer shorter than most other industries, right? Crypto moves pretty fast. Hopefully, when we all kind of reflect a year from now, we would have been thinking about the bigger other next challenges, right? And this probably the market would have figured it out. But we're towards the end of the panel, so I did already ask you about what are you excited about, so that developers could go and explore those areas. But I think since a lot of our developers hopefully are going to be watching this, I want to just go around and get your advice to anyone who's right now entering the hackathon as a developer building something in DeFi. And Sunil, we'll start with you. You could share a little bit about the builders, opinion when you started your protocol. What all did you have to think about? That what's first thing when it came down to Saddle? That line of thought would be super beneficial. And for Kyle and Saurabh, I think what do you evaluate in a new developer or a founder, right? Which these guys can already kind of preempt. So let's go around and help our developers in the hackathon. Sunil?
Yeah, absolutely. So for me personally, I actually had gotten into looking at DeFi when Andre first released the version 1 of his Y tokens. And this was in early 2020. And, started playing with these products because they solve problems I was experiencing personally. And that would kind of be my biggest piece of advice for new developers or even experienced developers in the space is that there's no substitutes for experience playing with some of these protocols. Even if you only put in $5 or $10 and move it around, deposit $5 in Compound, send some money on Polygon, see what the bridge looks like. That's how you really get your hands dirty and see how do these different protocols interact. And then you go dig it on the Etherscan transactions, plug something into Tenderly. How do you see how these things work, right? And without that kind of body of knowledge, it's really hard to figure out what do you want to build and what should come next, right? And it's really easy to do, doesn't take too long. And I would highly recommend all new folks who are participating in the hackathon take some time to mess around with DeFi.
Awesome, great advice, Sunil. Thanks so much, Saurabh.
Yeah. Well, my advice is, listen, guys. I think first of all, kudos to you guys who are basically building, because it's never easy, and obviously this is somewhat of an untreaded path for someone who kind of starts building, right? Because every day there is the price volatility, the overall regulatory movement, and then a lot of backlash. So I think it's startups are generally hard, but obviously going in this area is probably harder. I mean, I think one of my advice would be, I think really think hard about the solution that you're going after, because it's pretty easy in this market to get swayed by just building a quick product, which looks exactly like an nth product. And a lot of folks kind of go with that because it's easy and go, and to be honest, in the market euphoria, you can actually even economically benefit from it. But the only thing I'll tell you is that you will never be able to time the market. So if you think that you might actually look pretty good for first year, and then you just never know how it. So if it's not a long-standing product with a thought and depth of how you're bringing incrementality, you just maybe be careful about that. And the second thing as an investor, always, if you're going to go and thinking about the token routes and the governance tokens, so put a lot of thought into it. I think that's kind of one area where that actually brings a lot of, I would say, negativity or controversy in the space of people don't put a lot of thought into it. And obviously we have an overflow of tokenization at some point, and it's a great tool, and actually it's a great way of democratizing a lot of things, governance, utility, and so forth. But it can very quickly kill the project if for the same reasons if you haven't thought thoughtfully right.
Great, some very practical, real advice there. Thanks, Saurabh. Kyle.
Sure. I guess one final thought I'll provide too, just for the developers, is that just to kind of keep going, right? I think that in this space, the people who've really made a huge impact and created these industry-wide changing kind of products, most of the time it's just they just kept their head down and kept innovating, right? Even if the market conditions didn't favor them, or even if they didn't get it right the first time. I think the expected value of being in DeFi, just the EV here is so high compared to so many other industries, right? It's so nascent. There's so many opportunities to grow. And there's just so many different places that you could slot in, right? If not with your first, second, or even third iteration, you will eventually, right, hit on the magic formula, just because the community is so welcoming. You'll always find so many other people who are willing to jump on board and build products, right? It's only an area that's growing. A great example, I think, is Kane. I remember when he was raising for Haven back in 2018, right? And Haven, was not successful, right? But he kept working, and then it became Synthetics, So it's just one of those things. A lot of these other teams are similarly rewarded, like the Matic/Polygon team, right? Whether the bear market kept building, and it became what it is today. So I would just say that, overall, don't get discouraged, right? Just kind of keep moving forward, and eventually, you'll be making a huge difference, right? And I look forward to seeing what you build.
Absolutely. Thanks, guys. That's very reassuring to not just the folks listening in, but also for all of us who are also still building and hoping to take this space forward. Thanks for your thoughts. I want to still ask one simple question to everyone. I know I'm not going to ask you if you were not in crypto, what would be doing, but because I'm assuming that all of you would, in an alternate world, also be in crypto, right? Even though you've come from very different traditional backgrounds. I also know you love your jobs, what you do right now. So if you were not doing what you are today, what would you be building or working on? Just entertain the idea. We're pretty sure where you work, people won't mind hearing that. So let's go around, and I'm pretty sure all of us have answers in the back of our heads. We can start with whoever's ready.
I can take this. So one thing that I find particularly fascinating is kind of the rise of minor extractable value on all of these chains. And so if I had some free time and wasn't working on this, I would absolutely be kind of like trying to write my own infrastructure for searching for trades to submit bundles to Flashbots. I think that would be a lot of fun.
Great.
Yeah. I think if the answer is kind of not doing it in the crypto wall, I mean, or rather kind of my current job, and my background is in compiler optimization. So I think I would have probably gone back and using a lot of things there to actually figuring out a lot of scalability. I probably would be building another L2 on Ethereum, or maybe thinking of another layer one. Assuming the crypto wall hasn't taken off, and I'm still thinking about building some kind of a decentralized project.
Man, I don't know. So I'll give like two quick answers, one within crypto and one without, right? So if I were to do something else in crypto, I think it would just to be a developer, right? I think like just looking at like languages like Rust and these sort of things, like, just even though I'm just more of an enthusiast, like it just seems really interesting. And I just always think to myself, like, man, if I just studied computer science instead of finance, my life, it could have been very different, kind of interesting. But the more kind of out there answer is like, I would have kind of been interested to keep going with competitive ballroom dance. I was doing that in college, and it was extremely fun, right? But when the real world hit, you didn't really have time for that kind of thing. But man, that's a cool community, right? If you guys have ever watched any of that stuff, it's pretty fun. So I'd recommend it.
Nice. All the best for that, guys. I appreciate that your appetite and stomach to learn new things is what keeps you going, and even daring things like ballroom dancing. So appreciate your thoughts, and hopefully all our developers can find you online on Twitter. We'll share all your contact links as well. But really, thanks so much for taking out your valuable time and sharing your thoughts. Hopefully, we all can take the space forward every day for the next few decades. And appreciate you spending time for the hackathon.
All right, thanks. Great to be here, Sal and Peter. Thanks for organizing.
Yeah, thanks for having us.
All right, thanks, guys. That's it,
everybody.
Take care.